So the biggest thing here, we're talking about like swings and using those for entries. So this is a little, I guess I classify this more advanced TA in the sense that we're not just focusing on the indicators and stuff to help us. Yeah, they're going to be a useful tool in Confluence, right? Because you don't want to just blindly take positions. You want as much relevant information as possible. But this is going to be primarily just based off of price action and structure. So you guys know me. You guys know why I'm in love with the 4-hour, because I see enough of the high time frame picture, and at the same time I can use the stuff we have available, stuff like funding, stuff like, hey, look at that, we're bearishly deviating, all this stuff. But what does that really mean as far as entries? How do I use that in maybe low time frame scalp or even high time frame interpositions? So what I'm going to be doing is using some basic stuff combined with different techniques of saying, well, hey, we got bullish funding. That's great. That means we're incentivized to take long positions. So a lot of these factors are coming to play, but it's going to be primarily based off the candle structure itself. And this is why things like Heikin-Ashi, they don't work. They work for moving averages, they work for that type of stuff, but it doesn't really tell you anything about the market movement. So it's going to be really key that you kind of focus on, hey, are we breaking the swings? Are we testing the swings? And what different levels do and different tests do. So I'll go ahead and kick it off a little bit in the lower time frame, like the 1 hour, and just kind of look at it from this kind of perspective. So as an example, we had a really nice one, on Sunday. I didn't get a chance to talk about it, but it was a really nice failure. So what do we do when we have upside moves? We have swings. Swings is just the price. Swings the upside, swings down. So it's an upswing or a downswing, right? That's all of the market ever doing. Just going up and testing levels, testing supply and demand, testing what we're trying to get out of it. I'm going to go and turn the swing settings on this pretty high, and then use that to kind of like pinpoint the major swings as this kind of resets. And the reason I do that is because it allows me to say, like, what are we testing? What are the major levels? And it kind of like, okay, these are like the oscillations up and down, right? Price goes here, boom, boom. That's the general movement of the price, right? Now, the reason we do this is because we can now see where are the major tested levels, what's being tested in the structure, and why is that important. So with the swings themselves, we'll kind of like look at this major one here. The high of it, right? The high that was created was technically in this candle, this 1 hour candle. So what does that tell you? Well, it's a little janky in the sense that we created a new high that tested the previous high entirely. And what does that tell you? The swing is broken down into two parts, right? There's the low of the swing and the high of the swing. Now, you could talk about like the tippy tops as being the high or the bottom of the wicks as being the low. I like to look at the bodies because the bodies gives me enough information where I don't need to worry about everything else. So I'm just looking at the bodies because it's going to translate to better information as we go lower in time frame. So when I look at the bodies, if that's the low of the swing and that's the high of the swing, and we're looking for price coming up, right? When price is going down, and we have something like this, or let me try that again. That's the high of the swing. That's the low of the swing. So the reason that you flip them when I talk about it is because the way they test the low of the high will indicate and to give you kind of like a forward-looking idea of whether or not the price should break out and create new highs or new lows with higher probability or not. Again, nothing is set in stone. There is nothing that says price can't go higher or can't go lower. There is no ceiling. There is no top. There is no floor. There is no bottom. Your bottom is zero. Your floor, the top is infinite. That's the reality of it. But we use these swings and how they test the low of the swing and the high of the swing, right? If that's the low of the swing, that's the high of the swing. Since price is going up, that's the low of the swing, that's the high of the swing. And the reason is because if we test the low of the swing and not the high of the swing, the probability is that you're rejecting to go lower than the previous swing, like whatever happened back here to the left. If you test the high of the swing, right, and then you come back down, you're now increasing the probability that the next move up will break the high. Because what you're actually doing is fully testing all of the structure in there and saying, well, if we just tested the low of it and rejected, that means there's a lot of selling pressure, a lot of people trying to sell in that zone. But if we go all the way to the high and then it just barely fails and creates and fails to make a new high, in the bigger movement of the price, we're saying, well, there's a bigger chance that we're probably going to go higher. So we saw that here, right? We created a high, price went up, went above the previous high, closed below it, which would constitute a decent looking swing, and then we broke back down, tested the same low of the swing again, and then continued to the downside. But if we look at it from a higher time frame perspective, we then made a new high. Why? Because the high of the swing, right, this little part here was already tested. And I'll go through a couple examples of this because I know it's a lot to kind of take in, but what you're doing, if you're seeing the swing structure, you're now potentially plotting like your to-the-line trades, your to-the-line reversals. Excuse me. Get a little bit of cold. So that's the way we're looking at it from like that perspective. Because, and I'll just write it out so it's simple, low of the swing test means probability of reversal. High of the swing test that's all we're doing. So we test the low of the swing, whether that's going to the upside or the downside, right? Test the low of the swing. There's a higher probability that's going to reverse there versus if it tests the high of the swing, there's a higher chance of that price will eventually continue, which is what we end up seeing. So that's why when I say, that's the high of this, this is an upswing, downswing, upswing, downswing. Low of the swing, high of the swing. Low of the swing, high of the swing. It's in the relation of price traveling. And that's the hardest thing for most people to grasp once they realize that that's what's going on. Then you can look at the actual structure and look for retest level. So if we understand that, and I'll kind of move forward. Any questions on that? Does that not make sense? Or is that because it's a bit of a weird one because you're saying high and low and prices going up and down? Any questions? And the reason we do this again is because the way that price tests these levels is what indicates the higher probability of reversing or continuing in the overall trend. So if we understand that, right, let's look at some local price action and see what's going on. As an example, even here on the 1 hour, price is coming down, right? Downtrending. Where's the high of the swing? Where it's plotted, that's the high. Where's the low of the swing? That's the low. What does that mean? If that's the current low in the overall structure, and this tested the low of the swing, which it did, right? What does that mean? High probability of reversal. Price here, still testing the low of the swing, not breaking it, not testing the high yet. So we still have a good probability of reversal. And anytime you get into that zone, you're still looking for longs if the price is coming down and creates this swing, because we have a confirmation of a test that didn't fail the low, another low test which didn't fail the low. So the priority until we break this level is to take longs. And this is how you use this to start identifying local price action for trying to take longs and shorts. So if you see that happening, you can then look to the right and say, like, okay, what's actually being tested, right? That's a pretty mean one. Probably wouldn't have caught it because it would have missed you unless you were front running it. Here, this is the higher low structure that you're looking for. So now that we see that, okay, that's what's tested. Let's go to a lower time frame. What do we see when we come test these levels? On the 15-minute, we create a new low. Higher low continues away. Price comes down, gets close, continues away. Tests it, higher low, that's the indication of a long. Every day of the week, If I invert the chart, the same exact rules play out. That's the low of the swing. That's the high of the swing. We tested the low of the swing. What does that mean? Higher probability of reversal. If we tested the high of the swing, are we still looking for a bounce? Potentially. But that means in the overall price action, we're potentially thinking it's going to move that direction. So longs from this zone, since the chart's inverted, I'll re-invert it. Longs from here are still valid until we create new lows now from this swing. So what you're able to do by identifying this type of structure, and you can do this, and you guys have seen me do it on like the 1 minute, is that now you've seen that structure, the lows tested here, what's the level you don't want to lose if the low was tested but not the high? You don't want to lose the local structure. Well, I just moved it. There we go. If you lose that level, you can potentially hold this, but then what are you doing? You're looking for maybe shorting the next move back to the upside on a higher time frame. If we create a new low from that low, since this low tested the low of the swing of this overall low in this structure, right? The current low in the structure that we've created, that's the last place price can hold, is at the absolute low of this structure. That's why once we get a low, like a high of the swing test, which is, again, that's the high of the swing, that's the low of the swing. The low's tested, it's fine. If we test the high of it, we're looking for a potential short higher as we're starting to break down structure. And what would that mean? Look to the left if we do this. That's a new low, lower than that, and lower than a bunch of other lows. You can use something called the 3 to the left rule, which is, are you creating a new low or a new high from the previous 3 highs or lows to the left of you? If yes, even higher probability of potential breakdown. And that's what you're looking for. You're looking for failure once that happens. Now, a lot of times when you see this, like I said, this is still a valid level for longs because of the current structure. If you go below it and you do that test, you can still long the regain of that level, but you can't blindly long the level down here. In fact, you're probably looking to short levels as it comes back up. But if you're trying to scalp this, and this is a pretty decent sized range, it's 3%, that's a pretty big move for Bitcoin, you can look to say, hey, that's the level we don't want to lose. If we regain it, that's the long. If we bearishly retest it and create new lows from that low, that's nothing more than confirmation that we have to come much further back to the left. And this is why we look at it from the low of the swing test to the high of the swing test. It's probability of reversal to probability of continuation. And that's what we're going to be doing over and over and over again. And it's going to be like, yeah, okay, we get it. Like that's what you look for. But it sounds simple. Again, to the upside, right? Where's the current high? There. Did we test the low of the swing? Yes. Twice for 2 easy punts to the downside. Price comes up. We're on the 1 hour. Let's see if it did it on like the 15 minute. Popped up. Restricted below. Popped up, restricted below. Let's go to the 3 minute. Popped up, swing fail, lower. And these things play out on every single time frame the exact same way. You can do it on the 3 minute, you can do it on the 15, on the 1. I don't recommend you doing low time frames. And this, now what does this tell you? This is a blueprint. Now you're saying, well, we're testing this. This is the local, resistance. This is the local support. If we start breaking that to the upside, the downside move becomes a little less janky, right? If we start testing the highs up here, it looks a little janky. If we go down to the downside, we test that, you can only long to regain a level. And now what have you done? You've established your range, you've established the levels that you can say, well, with high confidence, regaining that low, like this swing that we created here, regaining that is a potential long. Back up to what? Take profit, take profit, take profit. If we go back to the upside like this, we can re-enter a short on a failure back within. And what do? Take profit, take profit, take profit. And now what are you doing? You're scalping the crap out of a range and absolutely destroying people as they're trying to play some smart idea of what scalping's supposed to be. And that's what it is. That's the smart play to say. It's like, that's what's important in the overall structure. You can see the levels clearly, and you can see the fact that we're actually reversing where we're supposed to reverse. So what are the invalidation of this zone? Like I said, you create this high, bullishly test, and then break the high, the range is done. You've now bullishly back tested the level, and it gives you a chance to potentially long the breakout of the range. And then if it breaks back in it, you can just flip your bias and continue with the plan. So maybe you get stopped out on one trade or two trades or even half your trade. But if you're doing this and you're planning your trade correctly with your entries, all you're going to be doing is saying, well, if that's my potential profit target, my invalidation is going, all the way to the high here. Let's say, I'll just draw a line from the high there. Is that still hitting my 3-to-1? Not really. I don't put my stop loss at the top of swings at the top of levels anyways, because guess what happens at the top? You get liquidated. Is that pretty reasonable? How many times can I take the trade and still make money? 4? I can get stopped out of a trade 4 times and still make profit on it. That's why it's called waiting for invalidation. And that's how you plan the trade. This here literally just played out exactly at the start of the stream. We tested the low of this swing, right? Looking at the 1 hour. Right? This high, that's the low of the swing. That's the high of the swing. That's when price moves up, moved down. The direction of travel was to the upside. We're using the bodies. And we moved away. Here, in this structure, again, that's the low of the swing, that's the high. Why? Because the priority in that area is down. So that's the low of the swing, that's the high of the swing. Why? Because it's moving to the downside. Again, when you test the low of the swing, that's a good probability. I'll just change this to high probability reversal, right? And that's all you're doing. If you can look at the structures and say, we've tested the low of the swing, this is the level now I'm looking too long until we fail the level. You've now created all the structure you needed to create. How about the high of the swing? Is that not an invalidation point? There you go. We'll even do it from the high there. Even better risk reward to keep it simple, right? I'll usually back run it just a little bit just because I don't want to get caught out right there. So somewhere around there. That looks pretty reasonable. If I do the same thing to the downside, absolutely. It doesn't change anything. And there's a couple things you can do with this now, right? So there, probably somewhere like that. Going back up to the high that we've created. Still a valid trade. Still over 3-to-1. 4-to-1 is usually what I look at myself anyways. 4 or 5-to-1. The higher the risk reward, the better. And there you go. That's basically the plan until the plan is changed. How does the plan change? If you test this level, it's potentially going to fail on the next time it swings back to the upside. Or if it goes low and creates a new low and bearishly back tests, guess what? You now have your invalidation of this range, because this is a range, right? We all agree to that. So what happens? You flip your bias and you say, oh, I'm going to short the crap out of that, down to the next low. And it has to meet the risk-reward requirements, right? Higher time frame, if you're breaking ranges, I'd probably go up from the 1 hour to the 4 hour, that type of thing. But there's a lot of stuff you can do with these. So I'll just open it up to you guys for some questions and let me know what you're thinking. I kind of want to hear what you guys think. But not kind of, I really do. Do you have questions about this? Does this make sense? Is something confusing about it?
Can you, yeah, go ahead, guys. Anybody?
Yeah, I had a question about, so it whipped up into the test the low of the swing,
Mm-hmm.
and then it came back down. So do you take the short on that one once it's back under the sell area, or do you take it once it's into that area?
So there's two thoughts on that, right? And that's a very good question. So kind of focusing on that, the idea is that if you want to just hit the short on that, you still can get stopped out as it goes all the way to test the high of the swing, because you don't know that's the local high, right? How do you know? That's the question. So what do? If you have your swings plotted, they're important. You have the establishment of the range, right? Because this is where price continued away and created a swing. You go down to a lower time frame. Are any of these actionable? Or potentially, this being a short is still actionable? Yeah. Once we break down from it, you're looking to short them kind of blindly in a sense. And even if you get stopped out, it's not invalidated until it breaks out of the range, in which case you flip your bias. So it plays out on the different time frames. What I usually do, and this is just me, or well, you guys can adopt it if you want. Whatever works for you is the best. Whatever works and is profitable is the best thing. I really look for this kind of double confirmation. And that might just look like, oh, it just popped up and then it failed back down. But what did it really do? Is that not an over-under? Is that not a swing fail? That's the moneymaker in my mind. And you can do that on the 1 minute for entries. Absolutely. If your TA is solid and you're doing this based off of like the lower time frame trades, that's a swing failure even on the 1 minute. It's a swing failure on the 3 minute, right? Yeah. But you always defer to the higher time frame swings. You can trade on the low time frames like this, but it has to be based off of high time frame levels or higher time frame levels, like 1 hour, 4 hour, and up. Because otherwise, you're going to be finding swing. You're just trading the 1 minute, you're going to find swings that don't matter or things that are like created. Because moving price a couple of bucks. Like, if me and Will were trying, we could probably move price a couple of bucks, right? But there's no point to it. I'm not a market maker. I'm not trying to, like, do what these guys are doing. Or they have, like, 200 or 300K, and they're, like, 50x leveraging it on the 1 minute to, like, create restrictions to hold price, get their fills, and then move price away. Because all they do is kind of, like, put their hand in front of stuff a little bit, right? The markets aren't where, like, it used to be, where we could smash a button and you can move the entire price of Bitcoin $100 like it was 5-6 years ago. It doesn't exist anymore. No one has that amount of liquidity, and the people that can do that, they wouldn't want to. The risk is too high to lose a lot of money. So, and again, the high net worth people who are doing this, there's guys who go in with a couple mil to trade like this, and they lose money. It's not like they only ever. I mean, there's guys who you'll see liquidations where individual traders get liquidated for massive amounts of money. There's a guy back last summer who got licked for 40 mil on BitMEX trying to hold us, I think, back around about 35 to 38K as we were coming out of the summer of last year. And we were watching it, and I was laughing my ass off because it was stupid. But it is what it is. So for me, the way I trade, I always wait for the confirmation, right? So that means plotting my levels on the 1 hour, something like that. I find the swings are important. That's the current high in the structure. That's the current low. That's the low of the swing. That's the low of the swing. That's the high of the swing. And that's the high of the swing, right? Because price is moving up. That's why it's the low. Price is moving down. That's why that's the low. And it flips. And that's why it's based off of the probability of it. So it's still valid to take these shorts until we start testing the highs. Once the highs get tested, what does that do? Let's say we go all the way up here and just fail like that, and we come back down. Well, guess what? That means all of the liquidity, all of the short liquidity, which was here, and this is a couple of percentage points or small percent difference. It's all stacked in the same area. It's all stacked in the same zone. And what do we know about liquidity? Well, if you just if you stack shorts in the same spot and they're all lining up in the same spot, this is why resistance and support become weaker, because you're building more liquidity in the same area. And when you get pockets of liquidity, all you gotta do is pop it. And what are those shorts? Maybe there's 10 million short from here, right? What if in this zone here, maybe there's 10 million in shorts. When they get liquidated, what's the effect on the market? The effect of the market, if you're in the short, is that it longs 10 million to exit those positions. And that's how liquidity is used as rocket fuel, both to the upside and downside. Because when you stack shorts, you stack liquidity in the same spot. The reason people do that, and the reason market makers build liquidity, is that they need enough people to get liquidated or stopped out of positions to move the market. They can't do that themselves. But if they say, hey, price is coming back down, let's just hold it. prices come back down. Oh, let's just hold it this time. And, maybe they'll run it back up one last time or something like that. And then they're starting to build their fills, like getting their shorts in place. And by the next time it comes back down, they're just smashing it. And then all of the longs that were in down here get liquidated and price nukes to a new low. That's all they're doing over and over and over again. And most of the guys that are doing this, they're doing it because they have liquidity requirements from exchanges, right? They're getting paid, or they have contracts with, Binance or Bybit or whatever to provide liquidity to the books. And that's how they're doing it. Is that they're hitting 100 mil a month trade volume, or that's not even a lot, like maybe 100 mil a week trade volume.
Yeah.
Does that make sense?
Yeah. So I guess one more question on the swing up and down. I see the white candle is obviously a bull candle or up candle, and the black is down. So is the swing level that's at the 1 hour or 4 hour? Is it the last candle that goes up? And then that creates a swing level, and then that's what you're looking for, or how does that?
Yeah. So what I'm looking for is something like this structure, right? Right. It creates a high, and then I'm looking at like the body that created the high, right? So I'm going from the high of the body. That's usually what I like to use, and then on that same candle, the candle that created the low, I'll use that candle low. That's what I use. I've seen some people use other things, but generally that keeps you both, like, from a risk perspective, to say, like, well, that's the failure that you want to see. And on the 1 hour, like, here's a great example of this. On the 1 hour, we actually had the exact same thing play out on the next, like, as this structure here failed, right? What did price actually do? Price came down from the high, and then swing failed. So that's a swing. Price goes up. That's a swing. Low of the swing. High of the swing. See? And that coincides with the previous idea, which is why that's the major level. It's still playing out from the previous swing because that's still the overall high in the zone. The high in the local high and the local low in the current price action on the current whatever time frame we're using it on are the most important levels. And then you base all price action off of that. And then you'll start seeing patterns over time develop the more time you spend trading them, is that you'll actually see that people are, maybe they'll create these restrictions and then, maybe it starts getting tighter and we start getting tighter and tighter and tighter until eventually they just send it off from the middle. Right, which is not great for us unless you're trying to hedge it, which for me 3% is not big enough to hedge a position for a Bitcoin long or Bitcoin short. I usually need about 8 or 10%. That's usually what I'm comfortable with. But even here, what are you seeing? Where's the local hold? What's holding closer from its lows? Well, the lows are holding a little bit better than the highs. The highs they're testing stuff, right? Comparatively, the lows, there's a lot of room to run. If we start nuking down, there's some more support. There's some stuff that's untested, and that's usually what we go for. So, and that's in the local structure. Like, you can always take this to a higher time frame. In which case, you just make your adjustment from the high. You just say, well, that's the thing that's interesting. The highs have been tested. Comparatively, it doesn't work out great because some of the candles are so large and some of the swings are so massive that it really gives you a false kind of indication. But even on the 4 hour to the upside, you go down a time frame. Does that still play out? Yeah. So it's in a manner of perspective of the time frame you're trading. And the time frame in which you're trading has everything to do with how you're planning the trades and these entries. So you need to be doing it like if your average trades are only open for half an hour or an hour, you need to be trading on the lower time frames, or you need to start taking higher time frame positions. Ideally, take higher time frame positions before you start doing low time frame positions, because low time frame wrecks people, and we all know that. Did I kind of answer your question? I know I went on a little bit of a tangent there.
No, it does. Just setting up the swings. I know the auto charting does it for me.
Mm-hmm.
So you're saying instead of the wick, use the
bodies. You can use the wicks too, but like for me, I don't like if I just put it on like back on wicks and I'll put the swings back on 5. So I'll put it back to like the normal settings, which is fine. This definitely works. You can use this as your high and low of the swing. All right. For me, I tend to if I use this, I will miss things. I will miss a lot of trades. I want to skip the bad trades and catch the good and not miss the good trades.
Okay.
So that's the way I usually look at it in that sense. But you can definitely use it in that sense, and the wicks still play out. That's why we do wick test higher time frame. Like, they do play out. I mean, look, it's the daily open currently, the high that we created last Friday. And does that play out in the overall structure? Absolutely.
Yeah.
But again, that's a major level. That's a long until we fail it. And it's all in relation to the time frame in which you're failing. But if we're failing levels, right? Failing levels locally, bullish back test in the daily. Let's see if we fail the weekly open. What do you want to see? Continued failure. You want confirmation of the move. That's it. Because the hardest thing to do, and this is like something that I'm guilty of a lot as well, is that I'll see a trend. I'll see a trend that's going like this, and my first instinct will be to try to short it. Because, I'm going to catch the top. And I've been fighting that instinct for years and years, and I don't do it anymore because I don't care. Like, all I'm really, really trying to do is saying, hey, as it swings back down, are we bullshit back testing levels? Yes? Continue. Because you're going to get a better expansion on the trend. This is why trading with the trend is the most like efficient way to trade when you think about the movement of price. Because if you could say, well, in the last hour it's trending down, higher time frame it's trending up. So what's the overall higher time frame priority of this structure? It's continue until we break structure the downside. What's significant structural break? Something like this. What does that do in the overall structure? We're distributing. Even if we create a new low from this low and we regain it, can we take the long? Sure. But what are we looking for overall? We're looking for failure, even if it comes back to the upside. The invalidation of that short is regaining basically the highs for the continuation. And that's why you're kind of like using this general range that we're creating now, understanding that, hey, there's other tools I can use. I can say, well, we're bearishly deviating on a 4 hour. Price is still holding up as strength and trend are coming down. That means we're deviating bearishly, but we haven't lost levels. Once we start breaking down and losing levels, even if we regain them, then I'm looking for continuation failure. And the only way to invalidate that is if we regain high structure, like 28.2, something like that. Does that make sense?
Yeah.
But again, funding's bullish. We're bearishly deviating there. The daily still has place to run. We're getting a little toppy on the daily, right? A little bit. And if we go sideways in this zone, thinking from a high time frame perspective, because, my life is the charts at this point. What are we doing in the overall time frame? What do we know about this zone that we're in? This is the volume dead zone in the overall structure for Bitcoin. Can we go sideways here? Is that not like the most painful thing we could do, potentially? Yeah, it's pretty painful. I'd rather just continue up. We all do. But again, what needs to happen? Are we really, really oversold? No. Nothing like we were in this upside move. This grind to the downside was a real help to us because we were able to then reset some of the strength and trend stuff. We went from bearish funding rates to back to bullish in the same area that was holding us down heavily. Where was the big incentivization for longs? Back around 20K when we had really bullish funding rates. So, there's a lot to say, in the overall structure. But when we have things like this will spike off, even in heavily bearish funding rates, deviating, shorting the levels as they fail back down, but we hold everything that's important after back testing bullishly levels that we, broke above for the first time. And we had the continuation move, and on the 4 hour, what are we doing? We're making new highs as we're bearishly deviating. So, until we start breaking levels, I'm not interested in shorting to a break of the trend, because the trend is still up. I can use the lower levels, these 1 hour levels, to the same as this one, right? I can use the 1 hour levels as like my guide to the local price action, and I only really care about shorting is if we do something like we start failing, right? You could short that. What's the safer short? The loss of the range. Because when you're losing ranges, what are you doing? You're saying there's no demand. You're seeing a flip of what is support, or it was resistance here, right? Here it was resistance. It became support. And now we're still above it. If we flip it to resistance, is that not losing a range? Breaking the trend potentially? Yeah. And that's the way I look at it from a high time frame. And that's why for me it's always going to be the 4 hour. 4 hours king because of that. Because I can see the high time frame trend, I can try and trade with it. The upside trend should continue until proven otherwise. Can I still trade both directions? Yeah. My higher time frame trades, are still long. We're very, very long from, just below 20K, as we were like 2 Fridays ago. But what are we doing? Are we seeing a little bit of failure here locally since Monday? Yeah, a little bit. Have we broken levels? No, not yet. And that's the way I look at it. But even stablecoin demand, like this is a cheat sheet of a on-chain metric. Like it's pretty neutral, relatively neutral. I'm not too concerned with it locally. It's like the hardest thing. It really is understanding the time frame to which you're trading, right? When you isolate swings, you look for tests of level. If it breaks the level, you're looking for that higher low, that swing fail. Price breaks down below the level we didn't want it to. It didn't test the level, which was kind of like the no level, and then it higher loaded. That happened right here. That's the structure it did. What did it do to the upside? Same shit. I'll move that back to where it's supposed to be. Right? Did it test the level we didn't want it to test? No. Did it test the level we wanted to? Yes. What did it do with that high? It did this. So both those trades are still valid until we break out of the range. And breaking out of the range either means to the upside, the trend continues, higher time frame trend continues. If we break it to the downside, even if we break down, you could look to punt the short, which is fine. And if we happen to regain it, you're still looking to fail the highs until we invalidate that by gaining the level. That's the invalidation of shorts. If we do the low. If we make a new low from this low, it has to gain the level that we tested bearishly and back tested, which is not ideal. But again, the high time frame trend is still up until we've lost it. I'm only interested in trying to short when we lose a level, and even if we regain it and then go back up, shorts are still valid until we now break out of the level. You're still looking to short the failure of the range since we've already failed it once. People are probably smashing buttons, and people are trying to buy the dip if we go back into it. And again, at the end of the day, it's all based off liquidity. So I know it's a lot, and it's like swings are confusing as shit to me, right? Or they were for a long time. It took me like a couple of years to really get tight on these things. But it's a helpful tool, another thing to add to the toolbox of things that are really actionable, and then we can start combining those. Like when I do on the normal streams, like for like TradingView and YouTube, it's mostly just talking about like weekly SRs, which are, the low of the swing or the high of the low of the swings from the weekly standpoint or the monthly standpoint, and that's why they're so relevant, because they're super high time frame, and that's why they play out the way they do. They're not super actionable, right? They're not as actionable as this stuff is. This is very actionable structure, but again, it's helpful in that sense to kind of give like the direction, because I'm not going to sit there and like explain that to the masses, because to be honest, I don't want tens of thousands of people trading like this, because that's not good for us, because the majority of them have to lose money. Any other questions on this stuff?
No. Yes, I do. Anybody else? Oh, okay.
Go for it.
Do you mind if I stream and then you can critique me as I go? Just trying to
Yeah,
digest.
go for it.
Thank you so much. 1 second here. All right. Can you see my screen?
No, you have Discord streaming.
Better now?
No, I see Discord, but like infinite windows of it. You need to select the. You have to change your window to Trading View.
Hold on. All right. Now it should work. Sorry.
No worries.
Better now?
Yeah, now we can see it.
Okay, let me get rid of this. So, for example, I was just trying to implement what you were explaining as you go here. So, for example, so this will be the swings here that we
Zoom in on it. I can't really see it from here.
Here you go. Just for example here, right? So this, yeah.
So that would be. See, again, that's a janky one because the actual high, the high it created was in the previous candle. It wasn't that high. To see how that's actually a false swing right there. Does that make sense?
No,
Okay, so do you see which candle it was that made the high?
this one right here.
Yes. Where's the where are the auto charting tools plotted it? Your 1758 level that you have there, that line, that's technically the high of it. That's why I wouldn't action on that swing because it doesn't look good on the 1 hour. Click on the 4 hour. You'll probably get a better one.
Okay. Hold on. Let me see if I can. So. Okay. All right. I see what you mean. So this will be the high of the swing.
Yeah.
This will be the low of the swing right here.
Yeah.
And we tested it here. If you will go on a lower time frame, we'll see that this is the back test of it, right? The low of the swing. On
Go back.
This candle right here.
Yeah.
Correct?
Yes.
Okay. So in the bottom, low of the swing, high of the swing. See if that means anything in the 4 hour first, because we're trading the higher time frame. Okay. All right. So you go back to the 1 hour here.
Okay.
High of the swing.
No. That's the low of the swing.
I'm sorry.
That's
no.
right. That's
high
the
the
low.
swing.
No. You have it reversed because the price is moving. The price is moving down.
Correct.
So the price is moving down. That means the low of the swing needs to be above the high.
Okay, say that again.
So where it's in relate, the low of the swing, high of the swing is based on the direction of travel because that's the only way to keep it simple in the sense that as price is moving down, right? The low of the swing, because price is going down, is that level you have there at 1633, and the high of the swing is at 1615. Because the probability is that if it only tests the low of the swing, that it's going to reverse. But if it tests the high of the swing, you're looking for a failure higher up.
Got it.
That's okay. That's a really confusing. I know it's a really confusing thing. And then also one other thing really is that you're on the 1 hour now. The other swing you plotted above you plotted on the 4 hour. Yeah.
Yes.
So if you're going to do them like that, I'd say your best bet is to trade them on the 4 hours.
No, but here's what I'm trying to say. Here's what I'm trying to teach me. This is my trade here, basically, correct? Of course,
So
limit orders, and the stop loss is right here, correct?
That's quite high. Again, I wouldn't be using that as the.
No, hold on. Just hold on a second. Just wait a second. I'm just trying to see.
Yeah.
I have everything written down here. I'm just trying to. So basically,
go for it.
You look for I wish you can do this, by the way. Whenever you're doing firesides, just to quiz people, see if they're
There,
they got
that's you see on the 15 that makes sense.
correct. That's why I remembered. Yeah, you have to go to a lower time frame. So in here would be, hold on one second. It would be somewhere right over here.
Yeah, somewhere about that. I'd say you're probably better to go a little higher than that. Like
Why? Okay.
like there, like there, like there. Like that looks pretty decent because
Why? Is this handle right here?
I'd say that if it breaks that on a lower time frame, it's probably going back up to test the highs of like 1760, something like that. If it goes above that.
So okay, got it.
But see again. But like, here's the thing: you're jumping from the 4 hour, or like what time frame was that on? The 4 hour. You're jumping from the 4 hour to the 1 hour. I'm more of like I would say your best bet to get started with this is somewhere around the 4 hour when it's a very clean 4 hour.
You can't. I mean, you can't implement smaller time frame trades.
You can, but what I'm saying is that like if you get comfortable doing it on a high time frame, you're not stressing out trying to get down to like the 15 minute or something or the 1 minute to try and enter the trade. But if you're on the 4 hour and then you say, hey, we're coming back down, which is what we just did, to retest the previous swing high, which is what you have now, you actually have another opportunity to potentially long it as long as it doesn't break back below that swing.
But I mean,
in the current price action.
Right. Let's just disregard all this price action right here.
Yeah.
I mean, we want to forget about this. Let's just okay.
Yeah. So there.
Sorry, I have to. It's spring break up here, so it's loud. Anyways, Mason, upstairs, please. Basically, so right here, what I'm trying to say is, why is it feasible like to implement, like you're right here on the 4 hour, this is the swing. Why can't you go into a small time frames just like to kind of get a better entry? And if that's okay, where your stop loss should be? I mean, what you explained above this wick or around this wick here, is that what you normally do? Because if we played it out, this would be your entry for short.
Yeah, and that thing you have there, that little entry.
Okay.
So, what is it actually doing? It's swing failing.
Failing. Yeah, it's swing failing.
Swing. So
which is low of the swing, correct?
Yeah. Yes.
Got it. So
what you're looking at for the probability here is that you're saying that we're flipping on the 4 hour. It's a swing, and you can see the high and the low of it on a lower time frame like this. And the reason you enter on the lower time frame is that you actually can see. Well, actually, what you're looking for is the swing fail of the swing, right? The swing fail of the swing fail, in a sense, right? You're almost getting that extra level of confirmation. And then what you're doing is you're saying, well, what's the invalidation of it? Does it hit does it check the boxes as far as, am I getting a 3-to-1 or better to the next levels, right? Am I able to short the levels, with pretty good probability that, hey, by the time I get to my first profit target, can I move my stop loss to profit type stuff? And that's what you're looking at, because if it regains that level, right, as it bearishly retests it, where does it have to go? It has to go back to the high to test it. So that's why and the important thing there is that just because you're stopped out, and I mentioned this on the other stream, which was, if you're getting stopped out does not mean your trade is invalid. It just means that you potentially entered too early or late because you didn't wait for confirmation, or the price went against you. At the end of the day, like, that happens. And that's why if we have a 3-to-1 risk reward, we can lose the majority of the trades and still make the profit of the trade.
Doesn't it, from my understanding, yeah, I agree with you. Doesn't it minimize, doesn't make your stop loss almost nothing when you implement this kind of trading? Because you know your swing, come on, mama can help you, please.
Get out. Okay.
Sorry guys.
That's okay.
So, does it minimize your loss when you put like a stop loss, knowing where the swing is? Does it matter how far you can put it out? As far
I would say I usually put my stop loss to where I can get some wiggle room in case if I'm trading something like not Bitcoin or Ethereum. Stuff that I would look for specifically would be, using those percentages we talk about, like 0.75, 0.7 on a stop loss, just because, if someone's going to be liquidated there locally, it's going to be something like a little 100x or something like that. And that's a more advanced thing that goes into looking at liquidation levels as they happen from exchanges. Was, as we know, 0.75, all 100x's are liquidated on all the exchanges. So that means that if someone's trying to short that, like back run it, that's where they would want to enter. And if they don't, you're either going to get stopped out, but the trade's still valid if it breaks back below the level and bearishly retests it.
That most likely means that that people got liquidated, but the whole structure of the price is still bearish. It just, the wicks are just massive because of the liquidation, but overall we're still bearish, right? When that happens.
Well, yeah, until it regains the level, the price is below it, and it's bearishly backtested the swing. So yes,
this wick can go as long as it wants, but as far as we have the close, it's until
it tests the high of the swing there at 1770. Once it tests the high of the swing, I'm skeptical of shorts until we actually lose that thing, because realistically, what swings are on a higher time frame, right? When you plot swings, what are they actually doing on the low time frame? Well, you've literally just boxed off a little range there, right? That's a 15-minute range, is it not? And that range that you're losing that range and bearishly backtesting it, saying we have lost that range. We will now go attempt to test the previous range, and that's why you look at swing structure, because from a high time frame, you plotting the swings actually shows you the lower time frame ranges of you losing it. Does that make sense?
Not really.
So look at the level between 1722 and 1770.
Okay.
Is that not a range?
Yes, it is.
Is that also a swing on like the 4-hour or whatever time frame you plotted it on?
Yes.
Yeah. So swings, when you plot them, are literally low time frame ranges.
Ranges. Okay. Swings. Okay. Swings in the 4-hour. Okay.
Well, no, just don't think about the time frame so much, but higher time frame swings when you plot
are ranges and small time frames.
Yeah, exactly. So what you're doing is then you're literally just shorting the loss of that range to go lower to test structure. So the short is valid until you regain that range. Does that make sense?
Yes. So this basically in the 5-hour, 5 minute, this is a range too, right here.
Yeah. It's just the range. Just goes up, creates a high, comes back. Yeah, it's never going to be perfect. Like, ranges are never, very rarely are ranges perfect, right? They are sometimes, it's extremely rare.
Is this like a valid short, something like this?
Not with those levels there. I would say, and this is just me, I don't trade the 5. If I trade a level, it's going to be like the 3 or the 1. I just don't like the 5 minute. There's something about it that's never worked for me, but that's just me. But swag it on the 3 minute real quick.
Yes. Okay, that's what I trade on. So basically, let me ask you this, and you would, because I sometimes be like right here in this price action. I normally just, for example, it's making highs.
Yeah, higher highs, higher lows.
This is okay, a lower high, lower low. This would be my trigger right here. No indicators, nothing. Well, the harmony oscillator, of course, but like I don't look at it as much because it's the 5 minutes. But this would be my trigger. This is
Potentially, yeah. Potentially, absolutely.
But
again,
stop loss. Like I used to put the stop loss pretty wide. Now I put it pretty soon, and I get stopped out, and I don't get a chance to enter again.
Well, on low time frames, the question is like when you're doing a low time frames, I usually put my stop loss at or near the invalidation of the short. So, like, where would the short be invalidated?
Here.
Well, that's your entry.
Yeah.
If you're going to enter there, where's your stop loss then? If you look like to the next, like a little bit to the left there. If it breaks.
Okay.
What? So
if we make a high, yeah, go ahead.
Yeah. So if you gain that, right? You were just on it. If you gain that, if price breaks above that and creates a new high over that structure, that invalidates the shorts, right?
Correct. Oh, yeah. Okay.
And now what you're doing is you're trading on, like, again, I don't recommend trading on low time frames just off the bat because it's a pain in the ass and it's really painful for most people. But what you're able to do then if you're trading low time frames is that a lot of times if you're setting your stop loss at the invalidation and the invalidation is not like at the top of a wick, because then you run the risk of getting like freaking liquidated really quick if it pops really hard above you. You can now set your stop loss at the invalidation, and even if it just hits that, stops you out, and then continues back down, you can re-enter your trade that you originally planned if it fails back under that level. And this is why 3, 4, 5 to 1 risk reward allows you to take the trade continuously until you can re-enter the trade 3, 4 times until you make the full you make profit on the trade. Like, I think, again, one of the hardest things...
The price could be doing anything like this, and this is multiple chance to enter short. It's not getting there. You have this whole area right here to play.
Well, I wouldn't be entering there. I'd be entering in the level below.
What do you mean?
So, like, where that box is, just move it down like $10. Like, there. So if price breaks back above you, but then breaks back to your entry point, you're looking for another bearish retest to say, hey, my trade's still valid.
So your
trade plan didn't, like, even if it stopped you out, but then it goes back below your entry and bearishly retests where you wanted to enter, you can re-enter the trade.
Okay, you could potentially enter here again or over here.
Yeah, I mean, that's the thing, because like all those things you have there, those little structures, right? Because you're on the 3 minute. Those are swings, right? Price is constantly swinging up and down. Even here on the 3 minute, you can see those little mini ranges, those little 10-minute ranges, and that's all you're doing is say we gain back above the range. Oh, we broke back below it. Bearish retest the range, continue lower. Bearish retest the range, continue lower.
This would be like the swings in the 3 minutes if you want to play it like that, right?
I mean, yeah, if you want to, have heart palpitations and sweat all night, I mean, you can play this. I played that game. It's fun. It's fun sometimes when, like, even Will's talked about having the DGen account that you can do this stuff with. But swing trading on low time frames is very hard to do unless you are like religious with your limit entries, or if you're literally you mostly have to market enter in and out of positions, which is not ideal at all. So it's a hard process to do, and I would very much recommend not like trading swings on low time frames until you've done it for months and been profitable on like the 1 hour and the 4 hour, because it's sexy. You can jack the leverage up to make the positions make you money, and it's fun to do. But the problem is that most people, it's an emotional roller coaster to do that, and I don't recommend it for people. Like, it's always the same thing. Stay on the 4 hour, become an assassin, understanding the swings, price action structure, gain loss of level, and do that for months. And then once you've got that like down and you're comfortable, solid with it, then you look at lower time frames. Then you look at increasing your leverage, because now you've got like your set system in place. And the easiest thing that I do is that let's say I have 2 or 3 losing trades in a row, I reduce my exposure to my account by half. So if I'm trading at only 1% of my account in these like scalps or swing trades, whatever I'm trading with, I'll reduce my exposure to my account by half if I have 2 or 3 losing trades. Simply because I don't want to, like, the entire thing, if you're trading, you're automatically not risk averse. Like you are able of taking risks. The problem is most people are don't understand risk and over leverage themselves in positions, and they get emotional when they start losing money. My emotional stop block for myself is that I just say, well, I've lost 2 or 3 trades. I'm just going to reduce my exposure by half and then see what happens. And if I lose 2 or 3 more, guess what? I'll reduce that by half. And I'll keep going down, usually until I'll just say, you know what, something's not right. I'm not hitting my trades correctly, and I'll just walk away. I'll just turn the things off. I'll just go for a walk, clear my head, because over trading is a very real thing. You know, people will like, oh, I'm on a hot streak. It's like, hot streaks don't exist. That's a total fabrication of statistics. They don't exist at all. Anyone who understands like any amount of statistics or math will tell you the exact same thing. You know, eventually your win streak, maybe you win 7, 8, 9 in a row, it'll come to an end, and then you'll be all bummed out because you get emotionally connected to the fact that you're making money and all this stuff, and by the time you're actually losing money again, it's a painful experience. So high time frame, 4 hour, understand the swings, and then go from there. Go from gain or loss of it.
Would you consider this is another good right here, high the swing, low the swing?
Well, 1473 level isn't really the low of the swing. It's a little bit higher than that.
Okay.
So it's like there. Yeah, there you go. Perfect. And literally to the dot.
Okay. Got it.
Makes sense?
Yes, and the bottom here?
Yeah, your 11 levels. Yeah, there you go. Boom.
Got it.
Does it start to click a little bit?
Yes, sir. Yeah.
It's just clicking a little. It's starting to click a little bit. I mean, that's, and you're never going to get them 100%. But what do you mean?
No,
Like,
yeah,
you
it
see
should
here?
be the top one. It should be a little bit higher. It should be on the green candle. Shouldn't
This
it?
one?
Yeah.
Yeah.
Sorry, I thought it was. I
1183,
couldn't see it. Yeah.
Sorry,
And again, it's never going to be perfect, right? Like, it's never, ever going to be exactly perfect. And when it is, it's like that lovely 1 in a million shot when everything's lining up. But there you go. That's lining up pretty nicely. And if you look to the bottom there, like as an example, so look where you created the lows there, 1184. So go to the candle where you have the swing low there. There. Go to the left. See that really down candle, that swing that really hard down? Plot a swing low and a swing high on that 4 hour, like the body of the 4 hour. No. On the body. On the body.
On the body, okay. Okay, like that?
Yeah. So what you're seeing there is that you're actually failing that swing to make new lows, and then when it regained, it invalidated the previous one because you created a new low overall with the ones you have plotted at 1160. But only because it created a new low. If it didn't create a new low, you have to use the candle to the left that's a new low. Whatever the low is in the move is, that's your priority. And a lot of times it'll happen.
Okay.
Yeah.
Oh. Got it. Sorry, go ahead.
Yeah.
Now.
So what happens is that you had price come back up. The swing structure, even to the downside, still played out because that's a lot of times that's what'll happen. It'll still play out that structure. But for me, I look at, I want 2 things when I'm really plotting swings for really accurate and sexy trades, and that is, I want ideally you get a bullish or bearish engulfing 4 hour candle, right? That's the ideal indication that you've created massive change in demand. So on top of like looking at swings and stuff like that, when you're actually seeing that 4 hour swing as, hey, that's a bullish engulfing candle, on that 4 hour. That's creating a demand zone. So your zone between 1160 and 1184, that is a demand zone where there's very high demand. It pushed everyone who was shorting out of position, and that's where you want local retests of levels. And that's where you can start getting into, the higher risk play of putting long orders in those demand zones, even at the top of the demand zones, right? On the higher time frame, and I've done this on stuff like the daily, where I've actually layered in longs and layered in shorts at bullish and bearish demand zones. And for the stuff that I plot myself, when I'm doing the streams on the weekly, that's why the weeklies play out, because these are weekly time frame swings that always coincide with lower time frame ranges. So even here, go down to the 1 hour and you'll probably see ranges all over the place.
Yep.
Oh, a macro, by the way, if you want to delete stuff you just entered, you can hit Control Z.
Control Z, okay.
Yeah.
Also, just a bit of cleaning up. Nisonic, you know how you were saying that you drew that box earlier and you were saying to add to your position?
Yeah.
Never add when the ticker is going against your position. So if you're in a short and price is going up, don't keep adding, because you never know when it will stop going up.
Gotcha.
Very good point. It's a very good point. And that's the whole thing.
That's why Viking said move that block down, because you always want to keep adding as it goes down, because your average price will eventually go up, right? It won't go down for the short. So
yeah, so basically, when you're adding to the position, and that's a great point. Thank you. Is it's the same logical fallacy, I guess, of shorting into an up move or longing into a down move, right? You wait for the confirmation, and that's why the block, like I said earlier, was move it down. That way, you're actually getting the confirmation. And again, this is a little bit more advanced TA stuff. So I would probably just from there just delete the 1218 and the 1194 level, because again, that's not
leave it. Leave it. So what happens is, just as an example, right? So you've got this swing now, right? At the bottom where you drew the arrow, right? Then you have the regain just 2 or 3 candles later, right? Of this swing, it gained and pumped up above the swing, then it came back and it back tested, right? So what happens is that's your first entry at 1184, right? 1184. If you keep going to the right, that's your first entry. Your second entry could be 1194, and your third entry could be 1218. You could use the previous levels to help you gain your 2 or 3 entry levels, and then you ride the wave up. You see?
Got it. Okay, so for this,
so even though the swing was invalidated, those points are still important in a way. Sometimes they add up, sometimes they don't. So that's why you always have multiple entry levels. And the previous swing levels usually help you to get different entry points that are relatively, I would say, decent. Instead of saying good, they're pretty decent. So yeah, that's why I wouldn't remove them until you totally blast past it or something like that. I don't know if that's correct, but that's what I've been following. So yeah,
he's not wrong. Those swing levels, most, and I'm from a high skill level perspective. A lot of people I know that trade on high levels, the only thing on their chart are swings they plot like that. It's just horizontal lines. It's not all the other stuff. We just use that because it's an extra confluence point of hey, well, we're bouncing and doing higher lows. Technically, we were bullishly diverging from that low that you have your arrow on. If we look at the harmony as an example, that's a bullish divergence.
Look here again, right there and right there.
Well, I mean, yeah, but again, that's more confirmation, right? Yep. So, the actual low was bullishly diverging. The higher low for your entry was a continuation of the up move.
Yeah, so anyway, you probably wouldn't have entered right where your arrow was. You would have probably entered at the second point basically, because that's like your higher low, right? And you're getting a swing test as well. So, yeah.
Okay. A higher high from this high.
And then you get
then-
a higher low. That's your entry because it tested your swing as well. The wick
Right.
tested your swing, so that's your first. Then you have your second, your third, and then you just ride the wave out, sort of thing.
Well,
You know,
Yeah, and that's what. Yeah. Okay.
you keep going all the way out. I mean, you probably would have exited at around maybe 1320 because you probably move your stop up to there after you've taken like your third or fourth TP at 1445. So yeah.
No, I sometimes leave it lagging. It's still in profit. Most likely the very first take profit, because I already made money on it. You never know what happens. It just keeps going up or keeps going down if I'm in a short. So
Yeah.
I always like my take. If I entered here, my stop loss would be like somewhere over here or over here. Because
Okay.
I trade a lot of small time frames.
Yeah, no, that's fine. I was just like, sorry, that was my brain working in the way that I trade. I'm so sorry.
No, you're good. I just it's a lot of information to digest, and it's like try to take pieces from everybody just to make your own system work.
Exactly.
I'm good. Thanks a lot, guys. Anybody else have any questions can take the floor.
That's pretty much all I had then, if that was everything. So, great questions. Great. Really, and I appreciate that. It really helped kind of drive that home, and especially from Rex. Being able to see that and those those swings and how they influence price action and structure on lower time frames. Like it's so key to understanding the movement, and that's all you're doing is understanding that the swings from higher time frames will constitute ranges on lower time frames. And then we do the simple thing of if we gain a range or lose the range, that type of stuff. So that's the simplest way you can possibly trade when it comes to price action. Yeah, you can use all the indicators to help you, like look at the momentum, look at like turns to try and find divergences that show potential bottoms or tops. But at the end of the day, it's a probability game and it's a risk game. And the way you simplify that and you don't FOMO, you don't smash buttons to get into positions, is that you wait. And if you get stopped out of a position, you say, okay, where's my invalidation? Where's my re-entry to that position? Like, what keeps that original trade plan valid without trying to stretch it? No, I'm very strict with myself where I say it must hit these things or I will not take the trade. Simply because I'd rather miss something than get in because I'm afraid of missing the move. That to me is more dangerous than, not taking a profitable trade. And a lot of times, especially when you're still developing a strategy that works consistently, the biggest thing and the hardest thing is to actually focus on consistently trading your plans and making sure those plans improve over time by following those simple things we always talk about with, risk and reward and, stop loss into profit and those type of things. But it's a time-based thing. It's not something you just, you jump into, smash some buttons, and you're a millionaire. And all of the people that did that in the last bull run, how many of them still have money? They don't. 90% of them at least, probably much higher percentages, gave all their money back into the bear market. And that's what happens. If you can do this, you can build consistency, you can wait for the stuff, and then that way you're mechanical. You're mechanically trading. And that's what, Will talks about, mechanical failures. Those what Rex was harping on about the older levels, about the swing fails, those are mechanical failures. And the mechanical failures are the level, whether to the upside or the downside, are the easiest trades that you don't have to think about. You just say, well, the price action is doing that. It hits the, check on all the boxes, and you move forward. But again, you're fighting your own mentality, your own ego, and that's the first thing you need to throw out if you're trying to make money consistently and long term. So that's all I had. That's all. I know it's a lot, but thanks again, Egil, for streaming. I guess that's it for the day.
Thanks
Cool
a lot,
stuff.
guys.
Holy Jesus.
What's wrong?
XRP's up like 15%.
Oh yeah, you can't short XRP, man. I just want to there's a part of me that just wants to look at Twitter and look at the XRP army. Everyone going, "I
Yeah,
told
man, I
you,
can just
XRP is
imagine the
replacing the
laser
dog."
eyes would probably come out again.
Hey, Chris.
Yeah.
Can you look at the Fireside chat? I just posted a picture.
Yeah.
Accuracy, good, close.
No, because like the swing, the high, you plotted the body, the swing low of it in the wrong spot because it was from the
red candle, supposed to be the red candle.
Yeah, supposed to be the red candle. That being said, you're technically plotting the swing high of the previous 4-hour down candle or the previous 1-hour down candle. So it's still a valid level. It's just it's not like the most clear level. So from the from the previous that's still a valid level for retest because you're bearishly retesting that low. But if you go lower time frame, you'll be able to see that it in the next down candle, it bearishly retested that swing anyways.
I see. Yep. Okay, clear in the 15-minute.
Yeah, I mean. It's the candle that takes. You mean the candle that's the higher? Let me pull my thing up again.
On
the Sonic chart there. It would be from the red because the red is the high that is the candle that created the high. Yeah.
Oh, that's
But again, like you also got to look like so if you look at the red candle, the one that created the high, right? The green candle to the left of that his low there at 02917 is actually the high, the swing high because it's the bottom of that swing down. So the valid levels there realistically are the weekly open or round about the weekly open. The level he has plotted, the weekly open and the two levels he plotted are the levels that are important in that zone. And the fact is,
I just posted an uploaded picture of that. If you guys want to look at it, it's more zoomed in. Oh, okay. I see. You guys talking about the low now.
you'd have to go on the higher time frame to see that more clearly. Because I wouldn't do that on the 1 hour, but like otherwise, like obviously February level, that's an important level to gain back above. But for me, it has to tie into the swing stuff to the left of us, which arguably it's even here on the 1 hour, the February is basically the midpoint of that range in a sense, and then it rejected it. But it'd be hard to just.
Viking's just like, I'll do it myself and show you.
No, no, because it's like the swing of the low, and I get confused. So I'm just like,
He said you gotta do a short one. Sorry for keeping you, man.
No, it's okay. It's all good. It's all good. So I'm assuming from the picture there, you mean the February level. So that's this stuff.
expensive.
This stuff.
Yep.
This
It
low.
means that the current price action.
Okay, in the current price action. Yeah, that's again like I wouldn't be plotting that on the 1 hour.
Correct.
Well,
Yeah.
you could just look in the 4 hour. I mean, and this is spot too. Like I'd probably because of the price action, I'd probably use the perp price because it's probably higher.
Damn, I drew that swing low perfect, just like you did. All right. Let's focus on Zilliqa today.
So there you go. That's the low of the swing. Price closed. Popped above. Price closed. Price opened. Retested the level.
Whoa, 1 minute stuff.
Oh yeah, but yeah, I mean, but that's really it. And what do you? I mean, do you want to wait for more confirmation? If you're sketchy about that, what about the gain of the daily open? And what happened as soon as we gained the daily? We had one fake out. We broke above, didn't back test it. Price came back below, broke above. Bulls we back tested, not once but twice. Continued, take the range, continue. And all of these things they're just like swings at different time frames. Like, so you can just do that over and over and over again whenever you find those swing points. Like, again, it's never going to work out perfectly. Here's an example of where this is almost a no trade zone. If you would have tried to play from the bottom, you might have gotten a couple scalps, but it would have been really, really hard. So again, there is no like perfect, system in that sense. Like, you'd have to really stick on the 4 hour, and then you see this nasty demand rejection at the February. We gained above, it coincides with the 4 hour swing, hold. It would have been really nasty. I wouldn't have gotten that. I would have been stopped out and frustrated.
Yeah, but if you're going off that swing that you just plotted, and then you look at the current price action, that would have been a perfect like buy zone for you as well. So
oh yeah, this whole thing is average entry into the buy zone. So ride that up. Yeah.
I was surprised to do this. I texted about it in the chat this morning. It's just I was like, February. Okay, that looks like a good level. I'm just gonna long it to the daily open, and look at that.
Yeah, I mean, lower time frame. February level became a pretty strong one. Very strong level.
Yeah, we did that. It was like about 5 a.m. in the morning here. Stop loss was like, I was like, I'm gonna get stopped out anyways, but I rolled the whole thing up. I was thinking it's gonna fail at the daily open.
Are we breaking out? Just moving back up in a structure. A lot of the biggest problems for most people is that it gets confusing the more you plot in the zone, in which case you have to just back up and say what's the most important stuff. Where there's overlap a level, it's usually where it's the most important stuff, even as you go lower. Oh yeah, like when I have my when I have like this whole thing on, and there's like hundreds and hundreds of levels. Because again, it's you got to play low time frame, and I'm not going to explain swings to people. Yeah, I know. So I'm actually working on simplifying some stuff. I've been charting out some zones with a new color scheme from talking to Will about a new color scheme to like just chart zones and flip a zone and stuff like that to simplify structure.
You guys going with the Middle Eastern team?
The what?
Middle Eastern team, like
Who's
sand
that?
color.
Oh,
the colors. It's like sand.
I don't know. He just says, "Yeah, try this." He's going to do the colors. He's the artist.
That's nuclear, my friend. Yep.
Maybe like a blue or something. I don't know. But yeah, and zones are pretty much the same thing. They're just combinations of SRs. Like that's how I just look at like major inflection points from like a high time frame, and they play out usually.
I just want to say right off the bat, man, thanks a lot, dude. This is some amazing information that I'm gonna implement on my trading. God damn, I did not know about this. The detail of this. This is amazing. Yes.
Well,
Thank you.
it's not even just that, man. It's completely like an absorption thing. Like, you know, there's the only two things that make someone better trading is like having someone like, and I've got a lot of experience, and I've been, you know, I've learned from some of the best in the space myself. And the reality is, it's a time based thing. It's not some low effort thing. Like, everyone wants to be a day trader. Oh, and you see the TikToks and the little Instagram stories, like, you know, some 22-year-old who longed a shitcoin bought a Ferrari, right? And then he's probably gonna lose all his money, and the only way he's able to continue making money is by turning his, you know, by selling his stuff. That, like, yeah, I'll sell you my for $2,000. I'll sell you my shitcoin pick list or something like that, right? It's like, oh, yeah, exactly. Or, you know, or we could do the whole, like, yeah, but what you're actually looking for here in the structure is that we're going to do the triangle, and then you take the difference, and this is the price action move that we do. Yeah, the measured move. It's like there's something funny and it's something, a term that I've been hearing is called the O face syndrome, and it's like all of the guys, their thumbnails are them like mouth open, like pointing at a chart behind them that they fill in with, like, oh, the next bull run's gonna happen, don't miss this. Like, oh, it's so like, it's cringe, so goddamn cringe, all of it. I don't know, we'll see. The what? Fear value cap?
FARR. FARR. A.
What are you
No,
saying? Like,
Fair value
oh,
gap.
fair value gap. Okay, here I'll pose you a question. Explain to me what the fair value gap is. Yeah, the gap, from my understanding, is just whatever people think fair market value is compared to what the price actually is, and that's the difference between that is the gap. That's the only explanation that even comes to mind. Like, I don't see that as like an actionable thing. Rex, do you have a better explanation for it?
Nope, I have actually no idea what he's talking about. Unless he means, unless Mm, to me, that's
I mean,
just like liquidity grabs. So yeah,
yeah, I mean, I
I think what they're trying to do is they're trying to say, oh, look at these liquidity grabs that happened, and the fair value of Bitcoin in that time frame was basically 25K instead of ranging from 26 to 24.
Oh my fucking god.
Is
Oh,
it
shit.
that what they're trying to say?
Oh my god. Look, I'm sorry. Look at Core. Whenever you're done, let's just look at Core. This is my DJ account. I wish Malone was here. My entry is 2.4355. Holy shit!
Short.
It worked! It finally worked! 2.4355. 276%.
there you go. Take some profit right here. Your higher
I can
line.
see that. Holy My realized P&L is 0.85 cents. I did not even take any profits. I completely forgot about it.
You better take some profits before
I
Apple
swear, I
starts
completely
buying.
forgot. I know this. Oh shit! Close by market close 75%. Fuck you. I'm out. Oh my god! I was like, hell no. No, I did not. I just saw it was top. Look at that. I saw the wicks. You see that right there? I saw the close of the candle at 4:30 in the morning in here, and I was like, fuck it, I'm shorting this, and I put my stop loss like within inches of that price. It showed me I would have lost like $12 if my stop loss was hit, which